evening. Welcome to Mutual Fund Talk from ETF Junction. This again on a new episode of Mutual Fund Talk. Basically, let me just share you briefly on what ETF Junction is all about. ETF Junction is basically a fintech platform which intends to provide complete ecosystem for the entire ETF industry, which involves almost every an element of that, which is manufacturer, ETF, service provider, stockbrokers, investment advisors, influencers, and above all, the Indian investors who are looking forward to participate in this journey. The endeavor is to solve underlying challenges which are there in terms of lack of awareness, maybe a absence of infrastructure on ETF, and in fact, the platform creates a maybe a hegemony for, or maybe a very unison for platform for smooth and inclusive growth of ETF industry in the country. Now, in the MF Talk segment, where basically this is a segment where we bring in the expert from the industry, right, who shares his entire perspective about a specific segment or a particular ETF. I'm very happy and delighted to share that today we have someone, Mr. Gurjeet Kalra. Currently, he heads the passive business at DSP Mutual Fund. In this role, he heads the sales and business development effort for Pan India, for ETF, as well as for the entire index funds at DSP. Very, very happy to share that, Gurjeet has been a pillar in the industry, someone who has spent 20 years, right? 2 decades is not a small thing. I think if you look at the industry was hardly at roughly around 2 lakh crore, and today we are at such a big number. And he has been, instrumental in every aspects of business, whether it's retail, institutional, and today he's, donning the mantle at passive business. Prior to joining DSP, where he's working right now, Mr. Gurjeet was with ICICI Prudential, the premier institution, one of the premier mutual fund in the country in different roles. Welcome, Gurjeet, to the discussion today.
Thank you. Thanks a lot, Saket, for inviting me and also the introduction that you gave. I am just one of the small parts of this industry and very happy to be in one of the most fascinating industries, probably at one of the better times in India.
Thank you.
And another point that I wanted to start off with is by congratulating you and your team at ETF Junction for taking up a part of the mutual fund industry, which today appears to be very fast growing, but still in terms of probably awareness needs a lot of efforts. So kudos to you guys for taking up the challenge of spreading that awareness for passive funds across the length and breadth of the country.
Thank you, Gurjeet. I think it's just the effort and help from, partners like you who is really taking this entire initiative forward, and we are seeing a fair bit of tractions coming from there. Now, let me just come to today's discussion as we are. I think, India's financial landscape, as we've been talking about, has seen an unprecedented growth, right? The pace has been fabulous. Among the notable development which we are seeing is the growth of exchange-traded fund, and I think a new terminology for many of them, but a very versatile financial instrument, getting traction all across in recent times, though it has not still, taken that entire trend as it has done in the global market. But within the realms of, ETFs, the go-to option for especially parking funds for a shorter duration has been something called Liquid ETF, right? Today we'll be talking about that, right? How it works and the different aspects. And I think we have the expert to share the entire thing from Gurjeet on that. So over the years, Liquid ETF has emerged in a very attractive option, right? Given the minimal risk and optimal return, considering the 10 years and all. No, so Gurjeet, coming to you for any layman people, right, who would like to understand what is a liquid ETF and also what advantages the product offers, right? Can you just share in a very lucid manner for the listener?
So I'll try and simplify it. The name itself, to a large extent, is self-explanatory. It says liquid ETF. So one thing that comes out clearly from the name is that liquidity is going to be a prime output of this product. Liquid ETFs are passive funds which invest in overnight securities like TREPs and repos in GSECs, having a maturity of just 1 day. So when I say overnight, you lend for 1 day to a counterparty, and the entire lending is against a collateral, and the maturity happens the next day. So the cycle of lending and repayment is all of 1 day, thereby almost taking out the factor of credit risk in this facility. The other part of it is, unlike other liquid overnight funds in the mutual fund industry, the liquid ETF is actually trader on the exchange. So anyone who has a stock share demat account can participate in a product like Liquid ETF. So Liquid ETF doesn't have interest rate risk in that sense, in the maturity is 1 day, and also that the settlement is guaranteed by the CCIL. So it's a very simple parking solution for people who are actively involved in the stock market in India.
Thank you so much. That was really well explained. And any layman would make it point to understand that. What are the advantages which you find, Gurjeet, in the product?
Sure. So there are different kind of advantages to probably the different kind of investors that would want to participate in a liquid ETF. For instance, let's say if I'm someone or an investor who is active on stock market today, the normal process is when you want to buy or invest in stocks, you bring in money from your account to the broker account and then invest. Similarly, when you redeem or sell your stock, the money comes to the broker account, and from there, you take it out to your own bank account in most of the cases. The other part is if you do not do these transactions between your bank account and the broker account, the other option is that the money will keep lying in your broker account till whatever period that you decide to either take it back to your bank or reinvest. Now, this money is actually idle money for that brief period of time that you do not deploy it. Liquid ETF tends to make it ideal money and not just idle money, helping you gain some amount of return on this investment. So anyone, as I started off by saying, stock market investors, when they are in a position when there is liquidity, when they are not deploying or they've redeemed, in that brief period, they can park this money in liquid ETFs and gain returns, which in today's context is higher than other liquid instruments like savings accounts, etc.
Thank you. So essentially, what you're saying that in stock broking fraternity or the stock trading fraternity, the money is invested in stock, and whenever you redeem or buy, for example, for redeeming, there are some which has 1 day or a 2 day for redemption to come in, and then money gets into the account which is a tradable account or with the broker who takes something as a margin, and then from there it gets shifted to the bank account. So that particular point is being saved, right? So that's beautifully explained, right? How does
That's
it
one
operate?
cycle of its market. Another point is people, let's say, who given margin, cash
Correct.
as margin,
Right.
and earn nothing on that margin money. They are better off if they invest in liquid ETFs and then place this liquid ETFs as margin. The approved liquid ETFs by the exchanges are a part of cash margin, and therefore investors who otherwise would be deploying cash as margins can use liquid ETF, gain the margins as well as earn something on the underlying margin that they through liquid ETFs. So that's another benefit or a key use case for liquid ETFs.
Correct. Thank you so much. So essentially what you're trying to say, right, is that, the money which was being given as a margin to the broker did not earn any rate of interest for the investor, right? Hardly any. Here, at least that is also giving him a return. So that's a added value. And clearly this product is getting a favorite of the trading use for stock margin, as you clearly say, right? Now, what is the percentage of liquidity which can be used, for margin money, right? As you understand, debt, equity has separate. Here, what do you feel? Is it the 100% or lesser?
So there's a marginal haircut of 10%. So let's say if I invest 100 rupees in liquid ETF and give that liquid ETF for margin, there's a 10% haircut, which implies that I can get a margin of 90 rupees on that investment. When investors, traders trade in derivatives, they can then use this 90% post haircut money as their cash margin. And as I said earlier, that they can earn additional return on this. Now, there's another factor to it, since how do you place such products in margin may vary from broker to broker. So before you get into the process of using liquid ETFs as margins, it is better to consult and check with your broker as to what is the process in their system to use liquid ETFs as margins. So yes, liquid ETFs are approved by exchanges as margin equivalents, and there is a haircut of 10% on such products.
Thank you. Thank you so much. So now that we've understood what is liquid ETF, are there certain concerns regarding it? An investor, when he comes in, what are the areas, right? What are the things he has to keep in mind so that, he is better placed as far as investing is concerned? So the next question is, what is one should be careful about when investing in liquid ETF, right? For example, taxation or brokerage charges. Gurjeet?
Absolutely. So I would not say areas of concerns that an investor should look into. I would say there are certain factors that investors should account for when they invest in liquid ETFs. Some of them you already mentioned, things like brokerage, things like taxation, then factors like exchange charges. So what time frame minimum that you need to invest for is going to be a factor of what kind of costs are involved in the total transaction of buying and selling that liquid ETF, which will include exchange charges, brokerages, or taxation. So these are certain areas that an investor should keep in mind while investing in a liquid ETF. There's another aspect that an investor should look into before choosing the liquid ETF is how the gains are accounted for. So there are in the industry multiple ways of accounting for gains. So we have an existing liquid ETF at DSP wherein dividend is declared on a daily basis and is paid out on a weekly basis to the investor's account. There, the price of that liquid ETF does not change. So the process that we follow is price is constant. All the gains are accumulated and paid out on a weekly basis. There are certain products which follow similar mechanism, but the payout happens in unit form. So there are cases, there are high chances that the payouts will come in the form of fractional units, which then getting into a settlement process is a different process altogether. So how your returns are also accounted for is a point that an investor should do ponder upon before getting onto. Yes, it is a point that should be thought over before choosing a liquid ETF.
Correct. Well, just an extension of this question, what kind of liquidity is here in this space, and what is the brokerage as being there, Gurjeet?
So if you look at the daily volumes of the ETFs on the exchange, the largest category in terms of volumes is liquid ETF. So today, the most liquid ETF category is liquid ETF. Brokerage is, as I said earlier, is a broker dependent factor and therefore will vary across brokerages. So there could be, it's an individual brokerage house call. So to make a comment on what is a flat brokerage structure is not going to be possible.
Thank you. So immensely, what you're saying that there's immense liquidity, not an issue. You can sell and buy from exchanges and also from mutual fund in case there are issues. That's one. Secondly, brokerages are almost zilch because the product is such. Right. Thank you. Thank you so much. I think you also covered.
People have, so sorry to interrupt, but a lot of discussion happens about liquidity in ETFs. One can just go onto an exchange screen and check the volumes of ETFs. Please, I can speak for my ETF. The volumes are enough to consume whatever quantity an investor wants to trade in. Plus, why do I say this confidently is because the underlying that this product is investing is, that is the TREPS market, is probably the most liquid and the largest trading segment of the debt market. So since the underlying is liquid, the wrapper, that is the ETF itself, become equally liquid.
Thank you. Just to get a sense, right, on the entire segment, right, though this was slightly late for introduction and how many players, how big, we just give some basic idea on that.
So there are about, as of now, 8 to 10 liquid ETFs in the market. The total size of these ETFs would be in the range of 16 to 18,000 crores. Quite a few have come up over the last 2-3 years. A couple of them are quite old. We have a liquid ETF, which was the second in the industry and has existed for over 5 years now. So that's the liquid landscape as of now in the ETF industry in India.
Thank you. Coming to your product, I think there's a launch which is coming up from your fund house. You already had a DSP Nifty 1-day liquid ETF that has been there for the last 5 years now. Why is DSP launching S&P BSE Liquid Rate ETF? Any specific reason there?
Yeah, absolutely. The answer that I'll give you is going to be an extension of what I said a while back. But before I get into the answer, I would want to thank all our investors who have had that trust and confidence in our existing liquid ETF. That liquid ETF, as I said, is a 5-year-old product, and the AUM is upwards of about 1,100 crores. So thanks a lot to all our existing investors. The second part, and that is the extension of what I said earlier, is how the accumulation is treated or accounted for. In our existing ETF, the mechanism is that we declare a dividend, and that dividend is paid out on a weekly basis to the investor's bank account. So this is for a segment of investor who want to encash their returns on a periodical basis, and their investment value remains constant. So your price of your NAV of the liquid ETF that we have currently is constant at 1,000 rupees, and it's a dividend option. So periodically there is a payout that happens to the investor's bank. It will suit investors who are coming with the mindset of looking at periodical payouts from their investments in liquid ETF. It also has its own sets of challenges, or why would someone not look at this product and look at the one that we are launching as of now? Because this is going to be a growth option. So when I say growth option, the returns will not be paid out in terms of dividend. The returns will reflect in the NAV or the price of the ETF. Therefore, the price of our new liquid growth ETF will keep changing on the live market on a daily basis, unlike the existing liquid ETF that we have, where the price is constant at 1,000 rupees. When an investor opts for the existing liquid ETF, there is an aspect of taxation because dividends are taxed at the time of payment and forms a part of the income from other sources for an investor. Here in the growth option, an investor will be required to pay taxes only when he redeems.
Right.
So if he does not redeem, let's say for the next 6 months, there's no tax liability on the investor. But in my existing liquid ETF with dividend option, since there is a payout that is happening periodically, let's say on a weekly basis, there is a tax liability, let's say for that investor, for that period that he's invested for. Second, since there are multiple payouts during the investment time frame of the investor, it gets at times difficult for an investor to account for all payouts. Let's say if I'm invested for 6 months, every week I'm getting a payment. It could get difficult. I'm not saying it's going to be difficult, but it could get difficult for investors to account for these periodical payments and then TDS on it, tax reconciliation. So there are these differential factors which are not a part of the product that we are going to launch, that we've launched in the form of DSP S&P BSE Liquid Rate ETF with growth option. So since all the returns will be visible on the price itself, for an investor to look at the returns he's also made or calculate is also very easy, because in the current form, you have to account for all the dividends and then calculate what the return that you've made on your investments. Here, a simple change in the price from your investment date till the date of calculation of returns is visible on the price itself. Therefore, acknowledging the return or finding out the return that you've made on your cash deployment in liquid ETFs becomes that much more easier. However, it does not mean that a product is superior than, or let's say a liquid growth is superior than a dividend option, or a liquid dividend is superior than a liquid growth. It depends on what the investor is looking forward to. We are only giving both the solutions to the investor in the liquid platform, depending whichever the investor finds best for his investment mindset. He can opt for either our existing DSP Nifty one-day rate liquid ETF or the new one with the growth option, which is DSP S&P BSE Liquid Rate ETF.
Thank you.
That's the sole reason because of which we've launched one with the growth option. We've met quite a few investors. There are feedbacks that we receive from our existing investors, based on which it is logical to provide them a solution if possible.
Definitely, I think it's a good solution, especially when the customers were having really tough time, reconciliation. And every time when the dividend is announced or declared, right, there's a tax angle which comes into place. And as such, the trading volumes are large, more frequent, that is a big help. And I'm sure this will really take the entire experience for many more new customers and the existing one to a better place. Just to, extension of here that, are the composition of the two same or slightly different? If you can elaborate, please.
So from what I understand, it is you want to know what is going to be the underlying investment.
Correct.
So they're going to be absolutely the same. What I started off by saying preps with 1 day maturity is what both the products will invest in. It's going to be a 1 day overnight product. So whether you come in a liquid ETF with growth option or a liquid ETF with the dividend option, the underlying investment does not change. It's going to be the same. It is only that how your returns are accounted for is going for a change. Growth will be accounted in your price. Dividend gets accounted as payouts in your cash in your account.
Look at the industries, especially, ETF obviously has been getting a lot of ground and coming back to the trading pattern, which we are seeing, especially after post-COVID. I think the number has really been, very encouraging from 4 crore to 13 crore now, adding up roughly around 25, 30 lakhs every day. This is where a big difference what we saw earlier in America, China, and now things are being seen in India, despite the fact that we're just 6 to 7% of the country's population who are invested into, equity, right? And when I'm saying equity, equity trading. Where do you see this product, right, which is so useful, so helpful, right? What is the foresight you see? First question. Second, that who are these addressed for, right? This entire product which we are saying. Gurjeet.
See, in terms of the growth prospects, I believe anything that offers a solution or helps solve a problem uh, has unlimited capacity to grow. Plus, based on the backdrop that the number of demat accounts is ever growing and has been ever growing in the recent past, which means more and more people coming into the equity markets and thereby increasing a use case or increasing the number of people who might benefit from investing in liquid ETFs. Therefore, the prospects are very bright and positive. We are really not a big part in terms of liquid ETFs as far as the overall ETF landscape is concerned. In about 6.5, 7 lakh crore, this is about 20 odd thousand crore, probably because of the lack of awareness. But I believe as more and more awareness goes out, and also through people like who've taken up this as a challenge, people will understand the benefit of investing or using liquid ETFs while they are active on the stock markets. So yes, the prospects are very bright. The second question as to who should look at liquid ETFs, the way I look at it, there are three broad categories which certainly should benefit by the usage of liquid ETFs. First is investors or traders who want to earn additional returns over and above their trading or investment returns by parking idle money in liquid ETFs. So instead of getting in the process of transferring money from broker account to bank account or the money lying idle in the broker account, they can use liquid ETFs to generate additional returns over and above what they make from their investments. The second category is the traders who generally use cash for meeting cash margin requirements on the exchanges. They can, as an alternate, use liquid ETFs against those margins. And as I said, these are products that are available at 10% haircut for the margin requirements. And the third segment is PMS managers can deploy their clients' cash component, uninvested money in liquid ETFs till the time they find the right opportunity to invest in stocks. So these are three broad categories that can benefit, we believe, from a solution like liquid ETFs. Again, it could be from our existing product, which is based on the dividend format, or with this new product that we are doing on the growth format. So yes, Saket, these are three key investment frameworks that can look at this product.
Thank you. So besides parking lot, it's also been beneficial for other areas which you have very nicely explained. So this brings us to the end of this particular session. I would like to conclude that liquid ETFs can help make trading more profitable, right? And if used in the right manner, right, it can enhance the entire great experience, and that too in the much easier and convenient way. Thank you so much, Gurjeet, for taking us through this entire product and its advantages and all the cautions one can take. Thank you so much for this entire session. Thanks a
Thank
lot.
you. Thank you. Thank you, Saket, and thank you, Team ETF Junction.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.